10-year yields continue to creep higher as we near an election resolution here in the United States. The midterm elections will go off tonight, likely with a Democratic win of the House, a Senate win, a Republican win of the Senate. But anything's possible at this point, given the fact that pollsters got it so wrong in 2016. I think the market is on edge that any of the two scenarios, or all Democrat or all Republican, can certainly be on the board at this point, and the market continues to see yields creep higher. Actually, you know, we saw a 10-year auction today, basically a tad lower than last month's, but the highest is 2011 with the two combined. But we saw huge demand for today's auction, which I think suggests that there's maybe a little bit of fear priced in, and maybe that this rising of yields, this technical breakout to the upside that we're waiting for, may have to wait a little bit longer. So we saw indirect bidders come in with both hands and take this auction down. The key concern here was that the direct bidders were so low, primary dealers and such, not having much interest there. So a lot of foreign buyers coming in and taking down this auction. Very strong auction when you look at the bid to cover, and keeping yields from basically ascending higher towards that 3.25 level and possibly through it. So right now, technically, we're near the highs, but we're starting to lose momentum. And if you look at market volatility, we are edging higher, still above the 14-day moving average for a sustained period, something we haven't seen very frequently, not just this year, but going back several years. So right now, market volatility relatively high in the Treasury complex, as it should be. Elections tonight, FOMC results coming out on Thursday. No change in policy expected, but there could be some, kind of a wink, wink, nod, nod about what's going to happen not only in December, but moving forward into 2019, which I think is the real enigma here. What does the Fed do in 2019 if they have accelerated inflation, but growth starts to sputter a little bit? That hasn't happened yet, but the market's telling you that they're expecting sub 3% effective funds at the end of 2019. The Fed's looking somewhere between 3.15 and 3.25 at the end of 2019. So there is a little bit of discrepancy. One of the two is wrong. Obviously, time will tell. And lastly, what to do? What's the market going to be focusing on after the big elections that we get tonight? Well, I think it's going to be pretty immediate. That will probably start immediately focusing on the Fed. We'll start focusing back on the volatility of the stock market. Will that continue? Likely because the elections are going to come and they're going to go, but they're not going to really start to sink into the market until next year, early next year. So I think right now we're going to start then focusing on things like trade again, focusing on things like G20 coming up at the end of the month, focusing on things like Fed policy, the things that really matter in the here and now. And I think that will happen rather quickly unless there is some kind of out of left field election return tonight that changes the scope of things, which I think is very uncertain, has a very low probability. So right now, 10-year note yields on the highs as we enter the U.S. elections tonight.